Morning guys. I'm in a trade here. I'm in this gold trade. It's just now I just want to do like a quick breakdown of what I was looking at here. Uh, and I'm planning on going live. Alright, so this is the last manipulation leg to the upside here. Let's use yellow for manipulation legs because I want to drop my fibs now. And then I want to get my standard deviations here. Okay, I'm most probably gonna take something off here because on 15 minutes we have a favorite gap. Sorry, it's on 5, not on 15. We have a favorite gap below here, which is where I actually wanna take something off from. But I also like this relative lows here. Now it's gonna be a risk-free trade. Let's put it just right here because I'm looking at that fairly gap. Also looking at how we've already have those down close candles on the left side. I like these relatively candles here, and they're perfect confluencing with the negative 2.5 standard deviation. I'm not gonna wait for this case. I'm just gonna take the negative 2 standard deviation. So this is what I'm gonna do right there. If I had like maybe 5 contracts or 3 contracts, yeah, I would be taking partials now because I'm already at discount of this, you know, uh, price leg. Excuse me, or I can just call it a range, you know, and looking at how we have those relative lows there, that's like a beautiful drawn liquidity, and I'm most likely gonna hit these relative lows down here of a small market maker model, original consolidation. This is a return back to original consolidation. This is an accumulation first stage, second stage, smart money reversal. The low risk sell is on 1 minute up there inside that fair value gap. And then it gave us, let me go to 1 minute so I can outline this market maker models. Actually, I think it's gonna go all the way down here. You know, because this is a perfect original consolidation. A return back to original consolidation. First stage accumulation, second stage somewhere, second stage somewhere here. And this is our second stage. You can take that as a second stage because this is just inside this range. And then this is a smart money reversal, low risk sell first stage. I think this is a reaccumulation or redistribution, sorry, because this is the sell side of the curve. If I were to put everything in context, and let's just say I'll have to watch how price trades below here, but I think because I think we're about to have the second stage somewhere here. So I want to see that impulse move to the downside, that drop to the downside, because I'm looking at we have relative equal lows on 15 minutes from this low, that low. We also have relative equal lows here. You see that relative equal lows, relative equal lows. All right, so I'm actually bearish. Okay, so if you look at that high to this low. Then if you look at this range here, let me just remove this because I want you to see this market maker model. This is the original consolidation lows. Let's use like a grayish color. Send back. Original consolidation, return back to original consolidation, and then it pushed higher. This is an accumulation phase. This is just an accumulation phase. Smart money were accumulating longs. So this is the impulsive move that I was talking about. I want to see it break and stay below, stay heavy below this sell side here. Then I'm gonna hold it. If it fails to do that, then I'm gonna have to cancel it because this is also a sweet spot here. Sorry. Let me use this is the midpoint of this range here. It's a sweet spot, so I have to watch that as well. It's also in line with the -4 standard deviation. But I can also take this whole leg here for my standard deviation from this low to that. And you see the original consolidation lows here are perfectly aligning with the -2 standard, -2.5 standard deviation, which is correct, which is a sweet spot. This is a sweet spot, okay? Perfect alignment with the original consolidation lows there. All right, so this is the first stage accumulation. Sorry, return back. First stage accumulation is inside that small fair value gap right there. Let me show you this small fair value gap right here. This is just the first stage accumulation. Sorry, this is the, let me put this on my left, on my right rather. This is an accumulation, right? And then second stage occurred right here. There's a bunch of volume imbalances and fair value gaps right there. Let's take that. It's a fair value gap on 2 minutes. And then you have this, or you can take this as a second stage. Either one of them. Because this is actually inside this range here. Yeah, let me just leave that. This is a second stage. Let me just type these things inside here. Reaccumulation of the market maker buy side of the curve. Copy. I'll have this inside at the center. This is the second stage. This is what I want to see. Staying heavy below sell side here. Now I have to be careful. If it fails to stay heavy, I'm gonna have to just look at that candle. It failed to close below sell side liquidity. Down there. Come on. Okay, I don't like that. And obviously, I'm not a financial advisor. So I'm doing this via paper trading. This is my paper trading account because I don't own any license. Okay, that's, I don't want to see it. I don't want to see it. Let's check 3 minutes. Look at how that can close below sell side. I don't like that. If this was a proper, this is how you know, this is how you see if it's gonna be like a proper market maker. So I'm leaving it, I'm giving it that, you know, space to refer back to its bearish order block, and then I want to see if it's gonna drop there after that. Immediate rebalance there. Let's see if it's gonna drop. Boom, 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 boom. Okay, it looks heavy now. Let's go. I want to see it drop one-sided. I don't want to see any retracement above this. So that's why I trade my stop loss to above that bullish bearish order block. I don't want to see it go all the way up to these gaps here. I want to see them remain unfilled until the damage has been done here. It should be quick to rush those stops below, right there. If it's a proper second stage distribution, that's the quickest leg of the market maker. This one here. So this sell side has been delivered. Don't like that. Spending too much time above, or what time is it now? It doesn't look like it's gonna deliver. This is already too much time. We hit that bearish order block right there. Why are we still going? Like, why is this candle not closing below this up close candle so that it can be now our new bearish order block? Why is it failing to do that? Yes, it crossed the opening price right there, but I prefer a close below that opening price of this up close candle so that it can then be our bullish order block. It failed. That's not random. That's not a coincidence. Okay, this is a message. This is a message, and it's telling me, hey, I'm actually heavy. We just purchased. Sorry, I'm actually, not that heavy yet because we just hit this bearish order block right here. It's actually a propulsion block because it's sitting on top of this bearish order block. When we hit that, I like that close, the body close, but the next candle should, you know, it should confirm by, creating a new bearish order block, and that would be if that candle can just, if this candle opened and it closed bearish below the opening price of this candle, so that it then can be what on retracement, the next candle can retest the opening price there and drop hard. But now it's coming back again and retesting the propulsion block. This is a bearish propulsion block. So you would see on my annotation, sometimes I just refer to it as a PB, like that. Okay, now it looks like it's trading now. So you'll see on my annotations, I refer to it as a PB. What is a propulsion block? A propulsion block is an order block on top of another order block. This order block here is sitting on top of that bearish order block right there. What is an order block? We just took relative equal highs out right there. With this candle, it has liquidity, and then we closed below it right there. So it qualifies to be what? This is a true order block. It's actually a proper order block. This order block here, it's an order block, but this candle also is sitting on top of that bearish order block. So this is a proper propulsion block. This is what I wanted to see. Now we are staying below the opening price of that. It's actually now what I can trust it. Reclaimed, retested twice right there, and then a sell off. Now we have a new bearish order block. The lowest down close candle, the lowest up close candle in this range is that one right there. So we just created a new one. Now I want to see it run quickly to my original consolidation sell side here. This is the next stop here. want to see it run quickly to sell side down here. There we go. This is not a financial advice, but this is how I trade the markets. This is the second stage redistribution, because this is how quick it is to move. It moves that with that kind of speed. That's exactly what I was talking about. That's the speed right there. That's the speed I was talking about right there. So this is actually a sweet spot because it's the CE of that original consolidation, and below that we have a -2 standard deviation right there. These are actually, if I had multiple contracts on this trade, that this is where I would be offloading some of those. These are actually the sweet spots, the original consolidation lows and the CE of that. And also you look at that, you have what? Sell side inside an imbalance there. That's a sweet, very sweet spot. But let's see. We trust in this second stage redistribution of a market maker to have that strength and heaviness to just push through all of that and tag us below um, original consolidation um, sell side right here, right there. So let's go. And obviously my trade was executed inside the macro, inside this macro, yeah, to 150 to 210. This macro actually initiated. It put in the sell program after price was delivering, buy side all the way up, going all the way up. This is a return back to original consolidation. This is an accumulation. Let's put this inside the center. All right. And this is, we said this is the first stage, right? Excuse me. This is the second stage. And then this is the smart money reversal during the macro. What time was that? 48. And then when we broke structure right there, what time was that? This is not random. This is algorithmic. This is not a coincidence, right? Broke structure inside the macro. This macro was putting in a sell program. Here above Asian highs. What do you have down here? Relative equal lows all the way down, and you can easily spot your market maker model. So far we are retracing. You can frame this is so the market maker is basically your framework when everything else is already aligning, so that okay, if I were to go short, where should I, offload some of the positions? Then you look on your left here, you already see that this is a market maker. So obviously you are going to have your low risk sell first stage. This is a low risk sell of the sell side of the curve, low risk sell, and then this is the first stage. This is a distribution. First stage, and then this is the second stage. Okay, I think we actually made an institutional order flow entry draw somewhere there. Is it? Let's check 3 minutes. Yeah, there we go. 3 minutes. An institutional order flow entry draw right there on 3 minutes. Institutional order flow entry draw is when the market partially enters the fair value gap. You see, we did not go all the way inside the fair value gap. So this is the second stage, and it has that impulsive like it moves so fast to the downside, as you saw it when I was outlining everything there. So let's see if it's gonna give us maybe the next three candles to finish everything off here. Liquidity. So on this specific video, I've already outlined so many things. You've already learned so many things on this one specific video. You already know what a market maker model is, the buy side of the curve. You already know it, and you know how to use it as a framework when everything is already aligning. And I've already taught you what to anticipate and how to anticipate that second stage redistribution, which is when it was initiated by that uh, redistribution. And then it was just, there we go. And then I outlined everything here on the 1 minute, telling you why it should go lower. You already learned so many things because this is the original consolidation. Original consolidation down here. Let's put this. Let's have this as red. Same thing here. I like red. That means red like that. Let's use this color right here. Yeah, then send it back. Okay, it's already, there we go. So this should be like a one thing. This is a blackish color. I already have so many connotations, and I'm looking at how that body closed below the negative 1.5 standard deviation. This is a, I like this. Yeah, even though it's just a small portion below it, but it gives me that kind of, trust to say, from this fair value gap, it's still gonna drop lower. If we failed and we weaked and the body stayed above this negative 1.5 standard deviation after trading inside that fair value gap, it was gonna cause me not to be too sure. I'm aware that it failed to close inside the fair value gap right there, but at least to stay below the negative one standard deviation. So that kind of gives me, you know, confidence to say, no, I think -2 is next. -2 standard deviation is definitely next. Let's go. And then from there, I'll be close to the original consolidation lows. Now I just need to close below this candle so that I have a bearish order block once again. If we can just cross this, the opening price here, that'll be nice. So I can have it as my bearish order block, and I don't want to see this price stay below, heavy below this. Once that happens, I'll be expecting price not to go all the way up there. I'll be trailing my stop loss to this high. Once we have a close below that, I'm going to trail my stop loss to here, but for now it has to just stay up there. And also, this is now what this is now my inversion fair value gap. So you use whatever you have on your buy side of the curve that was utilized for accumulation. On your sell side of the curve, those signatures are very, very fundamental. Like for example here, this is why we left this gap unopened, because this candle, when it opened, it retested this part, which was the second stage pre-accumulation. It was used as an inversion fair value gap. So this is actually a balanced price range. This range here is balanced because of the fair value gap that you have here on this side. It's a single pass up, and it's also a single pass down when you are on your sell side of the curve. So we anticipate price not to go back and fill those. If it does, it should just act as support, as resistance, and push price lower. The same thing happened right there when this camp opened. It opened at the low of that accumulation fair value gap, and it never went back to, and it left that gap here is actually should remain unfilled. And so far, that's what's been happening right there. And then that is not a coincidence. That open and the low of this fair value gap here is actually the same price. You look at the board, it opened right there and it was just one directional. The same thing happened here. When this one opened, it opened here, went lower, and the high of it is the low of the fair value gap that was used as for second stage reaccumulation. That is algorithmic. This is not buying and selling pressure. And then boom, went all the way down. So now I'm anticipating and hoping to get the original consolidation lows here, but if not, I'm gonna be tagged out in profit. And I'm not wrestling being right, but I'm just exercising and employing what I know. And yeah, so it's just a matter of waiting and constantly checking if that's like I like that. I just need to close below that, and then I'll trim my stop loss to above this high. But also, I'm very much aware that I'm inside the macro now, so I'm anticipating speed. This was a 248 candle that already has buy side. The macro started somewhere inside this candle, and we have sell side went all the way up, couldn't take out this high. I think this macro is going to be one directional. If it fails to take out this high, I think it's going to run to sell side, and this is what we need basically. Let's go back to 1 minute so we can start tracking everything again. We are almost there. So this is the macro name that's going to take us to our destination. So I'll be doing this next year, and I'll be trading gold and gold only. I'm opening a boot camp. I'll be taking maybe 1,000 to maybe like maybe 100,000. Maybe I'll give it like what, maybe 3, 4, 5 months. And obviously, if you're my student, you're gonna get a free pass. But if you're just a normal individual, you have to pay a fee, an entry fee. I'll disclose everything on my Discord. You need to be part of my Discord. I think people who are joining my Discord will get it like a discounted fee for all this, for the boot camp, for 2025 boot camp, because the 2023 boot camp that we held, we flipped 1,000, we flipped 3,000 to, I was trying to flip 3,000 to 500,000, but the highest we reached was 100,000. And then we took some losses. I also lost momentum, due to some personal stuff. And okay, now let me go back and check on 3 minutes if you now have a close below that candle. So far, we don't. Okay, so this macro is gonna be from 250 to 310. So let's see. Maybe it's still because it does have sell side, but it does not have buy side. Okay, let's see if this favorite cap is gonna hold it. That's beautiful. Let's go. So we've already closed below that candle right there, which is good, but I prefer the 3 minute time frame because it's a higher time frame than this one. Then once the 3 minute time frame confirms a close below that candle, then I can trust whatever structure I see on 1 minute. For now, yes, it's printing beautiful stuff, but I have to be using a hard time frame first for confirmation, then the one I need to follow. Those are true confirmations, I would say. So the macro started here, and then it's gonna end somewhere here, right? excuse me, 250 to 310, macro bottom center. You see what I'm talking about. Imagine if you trusted that fair value gap, you went short right there. Maybe we just stop loss above the CE. Wang. Now we have it. There we go. Now we have it. I don't think it's gonna go above this high now. I can actually trail it to the CE, just above the CE of this reaccumulation. We have that close that I was looking for. Bearish order block. Let's see. Ideally, now I wouldn't expect it to come above and take out this high here. We can retrace and do all of this, but we leave this high unattacked. And if it will, it shouldn't close above this high. If it does it, then I'm happy to be tagged out inside that, because then I don't know. I don't want to see it close above that high. 259. Let's see. So we weak. We should come back and close below. Actually, I prefer it close below the main threshold of this candle. The main threshold of this order block here. So the main threshold is the midpoint. So that's the main threshold right there. Not a bad close. So it's too heavy. I would say it's closed. Just you know, please zoom in a little bit. We actually closed above the main threshold. This is the main threshold. Yeah, but it's not bad. It's not like closing up here. This could be different on a different broker. Maybe we did close at the main threshold or just a little bit below it. So I take that. I take that. The macro already done damage. Now it has buy side and it also has sell side here. I think now it should continue with the run to the downside. Let's go. Let's go. It's 3 o'clock. 1 minute pass. We should be here before 3:10. I'm looking at how it's using this, the open of this candle as a support right there. Still struggling to close below it. Let's go. Indecisive. Let's go. Okay, it's taking longer than I expected. I'm running out of patience for this trade now. I'm just gonna kill it now. Because I have the same position opened here on my phone. I'm just gonna kill it now. Okay, before I do, mm, I'm just gonna let it hit my stop loss. Let me leave it. Let me actually just leave it. Because I'm looking at the fair value gap and the relative equal highs still inside the macro. So it might want to dig deeper and then sell off. Let's see. Let's see. Let's see. There we go. Let's go. Let's go. I ended. Let's go. Let's go. Now you are talking. Let's go. That's what I'm talking about. How far below original consolidation lows can this gold go? Negative 2.5 standard deviation. That's why my take profits is there. Come on. Let's go. Obviously, this is not financial advice, so hence using the paper trading account for these demonstrations. Excuse me. Sika Doomsday, let's go Doomsday, let's go Doomsday, let's go. Let's go. Beautiful trade. Let's go. Come on. Come on now. Come to daddy. I think I actually explained everything that you need to know about this trade. Everything. Uh, Obviously, that this macro is just a continuation macro. This was just to put in a sub program. This macro is a continuation macro. Boom. That's going to deliver. Sell side below there. I'm waiting for that. It's 310. We failed to make it to my target before 310. Let's go. Let's go. Let's go. Let's go. It's silver bullet hour now, so I would assume that this I think this is the silver bullet And silver bullet's actually a continuation to of whatever program is in motion. And so far, we are in a sell program. So a silver bullet, I would want a silver bullet that's gonna continue to my target here, obviously, but I'm very much aware that we have smooth highs up here, so it might just weak and then give a much stronger favorite gap after that, because this one I don't really trust this one to take us lower. I wouldn't go short and put my stop loss above it. Never. This is too smooth. And people who are actually short, they already have their stop losses above here. Mine is still above the midpoint of the accumulation. I'm not gonna expose it. I'm hiding it up here. So let's see if it's gonna run from this fairly gap here, but I wouldn't go short right there. I wouldn't. Let's go. Let's go. Okay. This is what I'll be doing in the boot camp, guys. If there is a South African trader who can take $100, not even $100, let's say maybe $1,000 to like 100,000, it's definitely me, bro. Not even 100,000 to $1 million US. It's definitely me, bro. This is what I'll be doing next year. This is what I'm preparing for. Only gold. Trading gold and gold only. 2 trades a day. Let's go. Now we hit that original consolidation equilibrium point of the original consolidation. Look at how just look at how this candle closed here. Look at the body. This is algorithmic. It's the same price as the midpoint of this range here. It's the same price point. Look at that. This is crazy. This is crazy. And people be out here telling me the market is moved by buying and selling pressure, bro. So they just randomly the people, the buyers and the sellers, they just randomly this cause the body of this candle to close at that level like that, bro. This is the algo. That's my new slogan, by the way, on my Discord. Let's go. Let's go. Daddy's waiting down here. Come to daddy. Come on. Come on. Let's go. Let's go. Let's go. Let's go. Beautiful trade, by the way. So you just cleared this sell side. This is very, very, because now let me just do this. Now I'm gonna trade my stop loss to just above this highs here. This is very important. Inside the silver bullet, what have we done? We just cleared sell side. If we break above this high, that's a bullish market structure shift. And it might mean we are coming for this high, we're coming for these highs up here, we're coming for anything, even those relative equal highs up there. So if that happens, if we break and close above this high, these highs are next, and I'll be happy to be tagged out there. And even if it drops, it's okay. But I want to see a strong push and a close. I want to see a close below the original consolidation lows. I mean the equilibrium of the original consolidation. We failed. And if we, because also look at how we just weaked below sell side here. Yes, the body did stay below, but it only fulfilled, this, it only closed at the original consolidation equilibrium. I don't like this. I wanted to see it close below it so that any move to the upside, I'll view that as a retracement. Right now, it could be a bullish market structure shift, and we could have a new entry for the silver bullet. That's going to be a retracement to buy side right there. So I'm just managing my trade like that. And I'm paying attention to every move. Let's zoom out a little bit. So we have, so actually, let me just highlight this. We have the volume imbalance here. And then let me transpose this and take it to 1 minute. I don't want to see any candles closing above here. There we go. A close above here would mean a new sentiment, and these highs will definitely be next. And I don't know what will come after that. So if it takes out these highs, at least it should just weak and stay below, then continue with the run to the downside. Right now we just closed on 1 minute above that. This is not what I want to see. Hence I'm tightening my stop loss. Let's go. Let's go. Let's go. So the fact that we failed to come for this high, you know exactly why. Because the sentiment will mean it's changing, and you don't want to see a bullish market structure shift after a sell side raid, because that's a very different story, my guy. So even if you're in a trade and you see that happen, you want to cut your losses short, you know what to do. Okay. Just clear this short-term low, but fail to stay below it. We are almost there. Let's go. Now I can just move my steppers to that high. So if you focus on this inside this range here, and you study this range, it has everything. It has entry, it has liquidity, soup, and you can find a trade here every day and any day. All right. It has everything. This range actually teaches you the market. It tells you what the market is going to do. And I told you that there's going to be a continuation macro to the downside. And we also have a silver bullet inside here. That's going to take us lower. I didn't like that fair value gap, but we broke structure, closed below, sell side liquidity, body closed. And then this family cap was then the silver bullet entry, stop loss above this swing high. If you're a high risk trader, but already this was extremely cheap for me to sell because uh, imagine if I just said, okay, I'm going to be trading a silver bullet and I'm already here and target is already here, which this does not mean that it's going to stop here. It can run all the way down. It can go all the way down to -4 standard deviation because remember below these original consolidations I outlined that we still have those relative equal lows on my left, but I like this. This is dope. Let's go. How far below original consolidation? -2 standard deviation, -2.5 standard deviation. That's what I'm targeting below sell side. Let's go. This is where I actually kill my trades. I don't really need to be that precise. But for this video, I'm just gonna leave this trade to run and see if it's gonna take me. But on my personal, I'm already out. Let's go. Let's go. I don't wait for the perfect exit. I don't. For the sake of the lesson, I'm just gonna leave it and see if it's gonna run. I'm looking at the week CE. I'm looking at the fair value gap. I'm looking at that uh, the midpoint of that, and my stop loss just sitting above that. If you were to take me out, it's fine. You can take me out up here. Come try catch me up there. But the trade was a success. Everything was outlined beautifully and perfectly so. So I'm done. Let's see. We have the week CE, original consolidation, equilibrium. We have the down close candle as a mitigation block. We have a breaker up here. We also have, sorry, we have a lot of PDRAs, confluences. So that's why my stop loss, I think, it's safe here if we are still gonna go lower because it's also above it's a premium actually, above the original consolidation equilibrium, right? So if we are bearish, we should respect the premium arrays. So we shouldn't come back to the original consolidation equilibrium. If we do, I should definitely not cross and close above this CE, which is the midpoint of that week. Maybe I think it's confluencing with the equilibrium, or just a little bit below it. I don't want to see it come all the way up to my stop loss there if it's still bearish. So I'm just gonna leave it there. Let's go. Shouldn't come all the way up here. I have enough PDRAs below my stop loss, my trading stop loss. If it fails and it tags me out there, I'll definitely fail with pride. I'm also studying this fair value gap. I don't want to see it close above the upper quadrant, which so far has been respecting it. The body is staying below the upper half of the fair value gap here. Those are the signatures that tell you that, hey, I'm actually heavy. Let's see if it's gonna close below. This candle is also gonna close below that because Daddy is waiting down there. Let's go. It's NFP week, so does this signatures here, because I'm looking at that candle, it did close above it, so you expect these kind of things when it's a Wednesday of NFP week. We have NFP week. We have NFP on Friday. So these things, I remember, I also pointed out that I don't want to see it close. It come back, I mean, above this, where was it? Above the bearish order block, I don't know, somewhere here. After it closed above, I mean, after it closed below the bearish order block, we created relative equal highs, respected the high because it was already saying I'm bearish. 3 minutes, I remember. You guys remember that? So you compensate those kind of deep retracement, like almost taking out the highs there, not once but twice. So on NFP week, these things you anticipate such things. You don't want to be too strict with the algo. It'll do these kind of things on NFP weeks, core CPI week, and on Jackson post symposium weeks. Also on FOMC days. All right, ladies and gentlemen, we are done now. I think it's gonna deliver. I don't think it's gonna retrace any higher now. From here, it should just shoot down to the target. I'm watching this inversion fair value gap. We just closed below it right there. On retest, I'm watching this week CA here. I'm watching that opening price as my bearish order block to push it lower. And also I'm watching, this is an immediate rebalance right there. This is an immediate rebalance. Do I have it on my, no. Strong signature. Usually when you see that, you must expect long candles like this one here, going down. Boom, boom, boom. Easy. Let me just say immediate rebalance. So when I'm streaming, you'll see I'm expecting long big candles. This is when I expect such big candles. These are the things that tell me that this candle is following. This is very strong. It's a very strong PDRA. Already we are close to the drawn liquidity. And then this happens. You must know that this guy is coming. Let's go. We have 12 seconds, 10 seconds, 9, 8, 7, 6 for this candle to close. I want to see it close below this minor sell side. Yeah, stay strong below that with a long B candle. Okay, another immediate rebalance here. I want to see another one taking us lower. Let's go. Let's take this. I'll take that. What a beautiful run. Outlined every candle from all the way down. All the way down here. This video is getting too long. It's getting too long. It's getting too damn long. I really didn't expect to stay. I mean, to be recording such a long video. I thought it was just gonna be a quick delivery to the downside. Let's go. This is how you manage your trade. You just don't blindly trail your stop loss. Everything has to be logic based. Exactly how I showed you today. So, boom, delivered. That's what I'm saying. This is what I'm saying. Ooh. Oh, shit. Oh, shit. Thank God.